What's up, everyone? My name is Ali. Welcome back to my world of stocks. Sorry for being away for the past couple weeks. I actually had a lot of family stuff going on for the holidays, but I am back now with a huge video because today we're going to be taking a look at every single stock I own in my personal long-term portfolio heading into 2024 and beyond. Now, before we jump into it, let me just quickly explain a couple things about myself and the portfolio. First of all, I'm a very long-term minded investor that is really always willing to buy stocks if they're at reasonable prices, but I also do the majority of my buying. I buy the heaviest whenever a stock is going down. I'm not afraid of that. I love to see stock prices going down. I try to buy heavier and heavier when that happens, try to get the lowest prices possible so that I can really benefit from them. I can maximize my gains long term as they recover and go up, and I can ride that wave. Now, I also love to invest primarily in tech stocks, really exciting companies, high growth kind of tech stocks that have bright future potential. But I also like to diversify, and I even like to own different types of stocks, value stocks, beaten down stocks, even dividend paying stocks are some of my favorite. And I'll even add some foreign stocks and speculative stocks as well. But, usually, and you'll see in this video, growth kind of tech stocks, exciting companies with exciting futures that I can really maximize my gains potential on. That's usually the majority of the stocks that you'll probably find in my portfolio, but also kind of beaten down stocks. I like stocks that are going down, get those cheap prices, all that kind of stuff. And of course, dividend stocks, who doesn't love dividend paying stocks? It's nice to hold those long term and be collecting all those payments. Now, this portfolio in particular that we'll be covering today, this is my personal portfolio, which I'm sorry for not sharing all of the information on it. I don't like to put all of my personal finances out there on the internet. I do have a lot of friends and family that watch my videos. Don't necessarily want them knowing how much money I have in stocks. And it's also just the internet. There's a lot of random people out there that you might not necessarily trust with all of your information. But the compromise that I do for these types of videos is that I at least show you what percent of my portfolio each stock makes up. I show you what the cost basis is on each position and how much I'm either up or down on it with actual screenshots of my accounts for proof that I actually do own these stocks, which I currently use three main platforms for my investing in this portfolio. And those are Robinhood, E-Trade, and M1 Finance. E-Trade used to be that I used the most when I kind of got into investing, but lately I've been using Robinhood a lot more in more recent years. And whichever account has the largest position of any stock that we talk about today, that's the account that I'll show you a screenshot of. So it'll probably be more Robinhood than anything else. But just know that I do have multiple different accounts for the portfolio. Now, if you do want more transparency on a stock portfolio or moves that I'm making, I did create a public portfolio from scratch where I show absolutely everything on it. It's a small budget portfolio where we only invest $100 a month. We just started it from scratch, so I'm less worried about showing all of that information, and I do update videos on that every month with full transparency. So if that is something you're interested in, you can watch those videos too. I make those at least once a month. I do update videos on that. And for that account, I actually use SoFi, which I've been really enjoying, by the way. And SoFi is actually a stock on today's portfolio that I'll be talking about too. So I'll let you know how I feel about SoFi. But yeah, it's a company that I really like, a platform I really like, and I do own the stock there as well. But that's for the public portfolio that I use, SoFi. Anyway, for today, again, we'll be looking at my larger private portfolio that I've been building up for many, many years. And because of that, there are a ton of stocks that we have to run through today. I think there's like 38 in total. So there's a lot here that we have to go through. And because of that, I won't be able to go into as much detail as I usually do with my videos on YouTube. Instead, we're going to have to do a bit of a fast kind of rapid fire style, but I'll show you what the stock is. I'll show you how much I'm up or down on that position. I'll give you a quick reason why I own it and maybe what I plan to do in the future. But with all that said, we got so much to run through here and I'm super excited. A lot of you have been requesting this video for some time, so I'm sorry for taking so long to put this out. I usually do at least one of these a year, but I should be doing multiple per year. Anyway, if you enjoyed the video, please hit that like button. Really helps the channel, means a lot to me. But as you can tell, I'm super excited to share all of this with you. I love talking about my portfolio. I love talking about my stocks with you. So I want to hear what you all have to say about it too. But with all that said, let's just go ahead and jump straight into this. Okay, so just to simplify everything and make the portfolio much easier to understand, I rounded off all the numbers and I separated the stocks into 5 basic categories to kind of help you understand my overall portfolio here and my strategy behind everything. So the biggest of those is the core category. These are sort of like foundational stocks that act like the glue that is holding everything together. And that's at over half of my entire portfolio. And to make it a little easier to understand, I also split that one up between large core at 36% of the portfolio, which are the top 5 largest stocks. And then I also have small core at 15%, which are an additional 6 core stocks that are a bit smaller in size. But then I have dividend stocks at about a third of the portfolio with 15 stocks there, which by the way, some of those stocks can actually be considered core stocks too, but I just group them together in this category instead because they pay some really attractive dividends and it's one of the main reasons why I'm investing in them. So I just felt like it makes more sense to group them here together instead. But then I have also international stocks at around 8% with 4 stocks in total there, which I usually try to limit this group to around 10% if possible. And the same goes for the final category of speculative stocks, which is at 7% right now with 8 stocks in total. But starting first here with the first group, this is going to be the large core stocks. Again, we have 5 stocks here with Microsoft and Tesla currently being the largest at around 8% each of the portfolio. Those two frequently interchange depending on really how much Tesla is just deciding to skyrocket at the moment and whether or not I have to trim some of it just to keep Microsoft on top, because I usually try to keep Microsoft as my largest stock. But currently, I am up over 100% on Microsoft thanks to buying it so heavily many years ago. It's really one of my oldest stocks in the portfolio, and because it rarely ever dips, it's usually one of my best performing stocks too, which I of course own just for the sheer size and stability and dominance of their business that I can use to build the rest of my portfolio around, especially given their strength in cloud computing, AI, gaming, and much more. The same can mostly be said about Tesla, except that it's had much better performance over the years, really climbing by thousands of percent, which I went all in on at some of the lowest prices when the media and so many investors and analysts were really attacking it and shorting it and trying to send it into bankruptcy. But I just kept buying all the way down, and now I've seen it turn into my overall best performing stock, up over 1,000% on my position, which I will continue to hold for all of their future potential in electric vehicles, autonomous driving, logistics, energy, and even robotics and AI. Speaking of AI, though, artificial intelligence, NVIDIA has actually grown into my 3rd largest stock this past year too, after skyrocketing in price by over 1,400% just in the past 5 years alone, which I'm not up quite that much myself, but I have been investing in NVIDIA for a while now, and I have 2 very large positions in it. It's kind of split between Robinhood and M1 Finance right now, where I'm up around 300% and 800% respectively. And I'm of course very excited about their future in AI, the data center, smart cities, gaming, autonomous driving, and many other things. After that though, I have Amazon at roughly 7% too, which I've also invested in for many years now, and it's really been a great performer long term, up over 80% excuse me, in just 2023 alone, leaving my position also up around 50% too, on a newer position here in my Robinhood account that has grown into the largest. I have owned it in other accounts where it's up more, but my largest is now in Robinhood, and that's how much I'm up. Anyway, I will continue to hold this one long term for their dominance in online shopping and cloud computing and several other things. I have a ton of conviction for Amazon long term, and I really plan to just keep buying on any future dips if I can get any. But then finally, rounding off the large core positions, I have the newest addition in Google at just about 6%, which I've been buying extremely heavy on any big dips, as I'd love to build this up into a top 3 position at some point, which so far has been paying off as I am currently up around 50% on this one too. I actually think Google is the best all-around stock in the entire market right now, and I especially like them for all of their advancements in AI, as well as their dominance in virtually any internet-based market out there. With that said though, it'll bring us now over to the small core section of the portfolio, which makes up about 15% with an additional 6 stocks here in this one. And the biggest of those is definitely Disney, ticker symbol DIS, at about 5% of the portfolio, which has seen their stock price plummet in recent years. And because of that, despite this being one of my oldest holdings, I'm actually negative on my position here too. However, that's of zero concern to me because like I said before, I love to do the majority of my buying when I'm actually down on a position, and Disney is no different. I recognize that they have a lot of challenges and that, they've also upset much of their fan base, but long term, I still think they have huge turnaround potential, especially in video streaming thanks to their iconic brands. And just as a media giant in general, I think they're one of the best out there, if not the best. So at today's prices, I'll take that turnaround bet all day. After that though, I have Meta at about 3%, which I'm investing in for their future in the metaverse, as well as their dominance in social media and digital advertising, as they already have around half the world's entire population using their apps, which I think gives them a huge advantage in populating the metaverse and developing AI algorithms too. And while they've burned a lot of cash building that up, it actually caused a giant crash in the stock price, which I was more than happy to take advantage of the whole way down. I know that wasn't a popular decision. I even had a few people commenting that Meta is finished and I'm kind of crazy for buying it, but time ultimately proved me right as the stock proceeded to skyrocket from that bottom, nearly tripling in size just this past year alone, and it left me up over 90% on my position too. So I'll continue to hold this one long term. Up next though, I have Palantir at about 3%, another, kind of somewhat controversial stock here, but I happen to love it, and I'm really glad that I went so heavy into it while it was down. I actually used to categorize them as a speculative stock too, but this past year I bumped it up into a core position as they've now been profitable for the past 5 quarters in a row, and I just think the sky's the limit here with everything they do in AI data management long term. So far, the stock has skyrocketed this year by over 170% because of their advancements in AI that are attracting a record number of customers, and it left my position also up about 100% too. After that though, I have Visa at just 2%, a long-time holding of mine for their complete dominance in digital payments, but it's one that I don't really buy anymore. Still, because the stock rarely ever dips, I'm currently up over 80% on my position, which I only hold in my E-Trade account at the moment. Actually, I might have some in my M1 Finance, but I think E-Trade is definitely my biggest. Up next though, I have Apple stock at just around 1%, which I wish I owned more, but the stock has just risen by so damn much after buying it that I just haven't felt too interested in adding more given the high valuation as currently the most expensive stock in the entire world by market cap. The stock itself is up over 400% just in the past 5 years alone, which I'm also up over 50% on my own position too. I'm still going to hold it long term though, just for how massively large and dominant they are with such a sticky business of a hardware and software ecosystem that keeps customers hooked into it, as well as the massive cash pile of over $160 billion that they can really just use to invest in any future growth initiatives they want to whenever they feel like it. And finally, I have a little bit of Intel at just under 1%, which I used to invest in for their dividend, but after they recently cut it by more than half, I'm only interested in keeping my remaining shares as really just kind of a small turnaround play for the future of American-made processing chips, which so far seems to be working as the stock actually saw a huge rebound this year of almost 100%, leaving me up over around 40% as well. All right, guys, that's going to bring us now, though, to the dividends portion of my portfolio. I love dividend stocks, and this is a big portion here. There's 34%, it's about a third of my portfolio, and it includes what is this, 14, it's like 14 or 15 stocks here. And again, some of these could also be considered core stocks, but I just lump them into this category instead because of their large dividends being really a primary reason for investing in them. But first up here, we have my favorite bank stock in JP Morgan Chase, ticker symbol JPM, at around 4%, which, as you guys know, I'm not a huge investor of finance stocks, but I have owned Chase for many years because of their sheer size and safety as America's largest bank, which makes for a very strong performing stock. However, it's one that is really not going to be immune to economic downturns, of course, being, a big bank. And I've been there to take advantage of each of those big drops too, which left my position currently up over 70%, with also a dividend yield of over 4% based on my personal cost basis. By the way, these dividend screenshots will be the standard screenshot that I use based on today's stock price, but I'll write over them in green ink to show you my personal dividend yield based on my own cost basis for the stock. Because if my cost basis is lower, then that means that my dividend yield is actually higher than what anybody else would get buying at today's prices. I hope that makes sense. Let me, if you have any questions, just drop a comment. But I'll be writing over with my personal yield. I'll be manually writing over that. Okay, moving on to AbbVie though, that's at around 3%. This is a biotech that I picked up during a huge crash years ago when they acquired Allergan to help offset the loss of their patent protection for their best-selling drug Humira. And after seeing a huge recovery since then, it's left my position up about double in size with a mouth-watering dividend of over 8% of a yield. I really hope they never cut that dividend, but as long as they continue to pay it, I'll be holding on to this one for as long as I can. After that, though, I also have PepsiCo at around 3%, which is another stock here that I've owned for a long time because of their large size and diversity across beverages and solid food snacks, which made for a very strong performing stock that rarely ever dips. I'm up over 40% myself, and most importantly, it's allowed them to not only pay a dividend, but actually grow it for over 5 decades in a row as a dividend king, which based on my cost basis, I also get a higher yield of over 4%. Now, I don't really plan on buying any more shares unless we see another big drop in the future, but I'll still hold on to it long term and I'll be collecting that dividend all along the way. All right, up next, we have the only ETF that I own in my portfolio with the Vanguard High Dividend Yield ETF, ticker symbol VYM, at around 3% as well, which is a solid ETF that really holds many different dividend stocks that I happen to really like as well. And after buying it during the 2020 stock market crash, the stock has really seen a large recovery since then, lifting my position up by over 30%, where I also get to collect a dividend yield above 4% as well. From there, though, we also have the biotech Merck at around 3%, which is a very large and reliable play on pharmaceuticals. And while the stock has had some volatility in the past, I've been able to take advantage of it at a few different dips, which after soaring the past couple years, it left my position up over 40% with a dividend yield above 4% as well. Then I have Medtronic at about 3% too, which is a relatively newer position of mine from the past year or so that I'm basically flat on at the moment. But I just can't stop buying this one because the stock is down huge for what is, in my opinion, the best and biggest play on medical devices, robotic surgery, and much more. So I definitely plan to keep buying here, especially while the dividend yields more than 3%. And then there's Pfizer at also about 3%, which I just can't believe how much the stock has crashed, leaving it trading near a decade low despite all the growth they've had from the pandemic, which turned them into the largest pharmaceutical company in the world. I'm currently down about 10% right now myself, but I plan to keep buying, especially for that mouth-watering dividend that yields almost 6%. After that, though, I have Verizon at just 2%, which I own really for being a beaten down stock, despite them really also being a leader in the telecommunications market with a giant dividend above 7%. I'm about flat on my position right now, but I will likely be adding more in the future. I just really like that dividend. Then I have US Bancorp at also about 2%, which is one of my newer additions that I picked up this past year on a huge dip during the recent banking crisis. And I'm glad I did because the stock proceeded to soar after that, leaving my position up over 30% with a monstrous dividend yield above 6% too. Not sure if I'll be buying more at this time, but it's definitely a stock that I want to hold for the long term. And of course, I'll be collecting that juicy dividend for as long as they pay it. After that, though, I have the biotech Bristol Myers Squibb, ticker symbol BMY, which I'm actually down on by close to 10%. But while the stock continues to trade this low, I plan on continuing to buy more of it for that big dividend that yields above 4.5%, and of course for the strong business as a leader in the pharmaceuticals market. After that, though, we have the last one here of any 2% weighted stocks in this category, and that's going to be Scott's Miracle-Gro, ticker symbol SMG, which I'm investing in for being the largest garden and lawn care type of company in the world, which I think is a business that will never go away, and they even have some future growth potential with the can markets as well. The stock itself, though, has been pretty volatile in recent years, but I was lucky enough to buy after a big crash, which after the recent rebound of over 30% this year, it left me up over 20% as well, with a dividend yield above 5% too. So really happy about that performance. Now, the rest of these stocks are all going to be around 1% or less each. I just rounded them up to make the group easier to understand. But the first of those is Broadcom, ticker symbol AVGO, which I really love as a specialist in chips, AI, and cybersecurity, among other things. But unfortunately, ever since I bought the stock on the dip when they announced their planned acquisition of VMware, the stock has proceeded to skyrocket, leaving it up over 350% in the past 5 years, with my position also up over 65% and yielding over 3% as well. I really wish I would have bought more, but maybe on a future dip I can add some more shares. After that, though, there's Tyson Foods, ticker symbol TSN, which is a relatively newer addition to the portfolio from this past year. It can be a bit cyclical, but right now happens to be one of the biggest crashes that I've ever seen in it. So I'm scooping up shares of this meat and poultry leader while I still can. They also have a great dividend that's yielding close to 4%, and I'm about flat on my position, so I will be looking to add more shares. I think right now is a good time to be buying it. After that, though, I have Walgreens Boots Alliance, ticker symbol WBA, which has been a bit of a disaster for me, if I'm being honest, as the stock continues to fall, and it's really trading for one of the lowest prices of the past decade. And even after a recent little rebound, I'm still down over 12% on my position too, so I've been having to kind of chase it down. I'm a little hesitant to keep buying more because this pharmacy retail giant does have a lot of internal issues that concern me, and that's without even mentioning the giant elephant in the room of Amazon continuing to steal market share from brick and mortar retailers like this. But that dividend is pretty attractive at over 7%. So, while the valuation is cheap, I might have to add a few more shares to lower my cost basis. I did buy after, I mostly bought after the giant crash, but it just kind of continued to drop after that. So it's been a bit of a struggle for me to get positive on this one. But finally, though, that's going to leave my only REIT in the entire portfolio, and that is Extra Space Storage, ticker symbol EXR, which is also one of my newest additions too, that I bought after seeing it crash as well. But I wish I had bought a ton more of it because it recently rebounded by close to 60%, leaving my position also up over 25% with a dividend yield above 5% as well. I think they've got a very strong business long term in self-storage. So I'm just kind of really hoping that they start dipping again so that I can buy more. And again, I wish I would have bought more when I had the chance, but it's kind of up a lot now, but we'll see. We'll see how it goes. All right, guys. So with that said, it's going to bring us now to the international portion of my portfolio, which only makes up around 8% of it and currently holds 4 stocks. Now, like I mentioned before, I try to cap this portion at around 10% if I can. So right now it's, right near that level with a little bit of wiggle room left too. In any case, as you may notice here, all 4 of these international stocks are from China. And that's because I just see the most kind of foreign potential in China. If things can de-escalate between the US and China, I think a lot of these beaten down Chinese stocks could soar over the longer term. However, I still try to limit my exposure to them because of all of their inherent, Chinese risk and of course the VIE structures that they all use. Now, Alibaba is the biggest of these at 4% of my portfolio, which I just feel that it's the overall kind of largest and safest of the bunch, with a lot of dominance in the e-commerce and cloud computing markets, among other things. But the stock has performed horrendously over the years, currently trading at one of the lowest prices I've ever seen. So I'll keep buying while it's down, and I'm currently about flat on my position. After that, though, there's Tencent and Baidu, who both make up around 2% of the portfolio, which I like for their dominance in areas of AI, gaming, digital advertising, search, cloud computing, and many other internet and technology based markets. Both stocks have seen mixed results over the years, but recent rebounds have left my positions positive on both of them, with Tencent currently up over 10%, while Baidu is up a little more at 16%. And then I also just have a very tiny amount of NEO, and it's just ticker symbol NIO, at around 0.2% of my portfolio, which is just kind of a speculative gamble on their future of electric vehicles and autonomous driving. And I also like how aggressive they've been lately, especially trying to expand internationally too. It's been pretty impressive. And from their highs, the stock has crashed by a gigantic amount, and that's what really convinced me to start buying it. And after a recent rebound of over 26% in the past month, it's actually left me positive by about 9% right now too. So it's going well for now. We'll see how it goes. All right, guys, that's gonna leave us now though with the final category of the portfolio, and that's of course the speculative group of stocks, which is made up of 8 stocks in total, most of which are high risk, unprofitable companies that in my opinion have a lot of future growth potential. The largest of those is currently Duolingo at about 1.8%, which I actually first purchased it on a crash, but it later ended up skyrocketing, having a spectacular 2023 of over 230% gains, which I wasn't expecting, but it nearly doubled my position on it. Probably won't be buying more of this one at this time, but I still want to hold them long term as a great AI play on the future of digital education. After that, though, we have SoFi at around 1.7%, which I absolutely love this fintech. I actually started using them for our community portfolio too, as the platform for buying stocks there. And I've just been having a lot of fun with it. It's been a great platform. But so far, the stock has had an unbelievable year, rising by over 120% as they continue to grow and expand, which left my position also up over 60% too. And I definitely want to buy more of this one on any future dips. Speaking of fintechs though, I also have the AI specialist Upstart Holdings at just under 1%, which is disrupting the traditional lending markets by using AI to improve their accuracies and efficiencies. And with the rise of AI over the past year, the stock has also seen a giant rebound of over 250%, which left me up over 150% on my position too. I bought it after it crashed, and then it had a big rebound, and that's how I've been able to make some big gains on that one. But then after that, I have Teladoc Health at around 0.7%, which has actually been a super volatile ride throughout the pandemic. But I started to buy shares right after the giant crash following the pandemic because I saw this leader in virtual healthcare, and it skyrocketed during the pandemic, but then right after it crashed like to some of the lowest prices I've ever seen in it. And I was like, okay, I'll take a chance on that. I mean, it's down huge. So I ended up buying some. They did have a strong rebound last month, but I'm still just about flat on my position right now. But it's a stock that I do like long term. And then after that, I have 3M at just over 0.5%. This is of course, the giant company that makes Post-it notes, Scotch tape, and a huge amount of other products too. They do a lot of things. And I actually first started buying it for the dividend, as this is a dividend king with over 5 decades of growth on over a 5.5% yield. So I thought it could become a core dividend stock in my portfolio. However, I stopped buying it when a number of lawsuits and other business related issues started to worry me, and I wasn't sure how it would affect their dividend in the future. So I'm still just kind of holding on to the small position that I have. I didn't really add any more to it. I just kind of let it dwindle down, but it's still there. I have it as a potential kind of turnaround play. But so far, the stock has been falling regardless. And despite having a recent rebound last month, I'm actually still negative on my position too. Up next, though, I have Robinhood, which has been one of my favorite platforms for buying and selling stocks. I've actually been, of course, showing you a bunch of screenshots from the platform in today's video. But more recently, I've been feeling like SoFi might be a better alternative. So I kind of stopped buying this stock. And either way, Robinhood had a giant rebound last month, climbing by nearly 60%, which left my position up over 30% as well. We'll see how it goes. I'm just kind of holding this one right now, though. Like I said, I like SoFi more. And then I have General Motors at 0.4%, which is one of my newest additions to the portfolio. Kind of just like a little turnaround play on a legacy automaker that I think can turn things around with EVs and autonomous driving, but so far it's been a volatile ride, and even after a recent rebound, I'm actually still negative on my position too. So I'll be looking to add more shares and lower that cost basis over time, and then hopefully, it soars in the future and I end up being up a lot on it. But then finally, I have just one other stock here. This is actually one of my newest purchases, and this is in HIMS at just about 0.2%, which I haven't purchased any more of this stock recently because the stock shot up right after I bought it. It's currently up over 40% in the past 3 months alone, which left my position up almost 20% too. So I'm still just kind of holding it. It's a good direct to consumer kind of healthcare company, in my opinion. I do think they have future potential, but at the moment, I don't think I'll be buying anymore. But there you have it, guys. These are all of my stocks right now for 2024 and beyond. I hope that you enjoyed the video. Make sure you subscribe if you want to see any more future updates on this portfolio, and make sure you leave comments for me down below because I'd love to hear what you all have to say. Do you like my portfolio? Would you make any changes to it? I'd love to hear feedback, guys, because we're all in this together. We can all help each other. So, if there's any advice, any feedbacks you want to give me, I'm all ears. I'd love to hear it. But either way, I wish you all a tremendous upcoming year. I hope that we all find success in the stock market together. And I just want to say thank you for everything you guys have done for me, and hopefully my videos have helped you out in some way too. But anyway, thank you so much for all the support. I love all of you. Hope you're all doing well, and I'll catch you in the next video. Take care, everybody. Bye-bye.